Nintendo's results for the July to September 2025 quarter are now out. While this doesn't include the launch of the Switch 2 itself, it does include the majority of the console's early time on the market and the time window in which Donkey Kong Bonanza released. As ever, I'm going to take a tour through the data we have here to see what there is to uncover. Do consider subscribing to the channel to see more and check out early ad-free and exclusive content on the Patreon link below. Okay, let's settle in to the November 2025 financials from Nintendo. Firstly, let's look at the consolidated financial highlights page. I always think this is somewhat misleading because, of course, they're comparing quarters with quarters. So in this case, the comparison is with April 2024 to September 2024, a period which had Paper Mario the Thousand Year Door, Luigi's Mansion 2 HD, Ender's Ocean Luminous, Nintendo World Championship, Emio the Smiling Man, and Zelda Echoes of Wisdom release. The same half of this year had the Switch 2, Mario Kart World, Donkey Kong Bonanza, and a few Nintendo Switch 2 editions and downloadables. The net sales are double, and the operating profit is actually up, which confirms that the console was not being sold at a loss as we knew. On the other hand, the operating profit ratio is significantly down to 13.2%. This is historically low for the company over the long term, excepting that period between April 2011 and March 2017, where the company was posting negative or mid-single figure operating profit percentages fairly regularly. Then again, it's down significantly on the 20 to 30% figures we've seen so far this decade. I don't have net profit comparisons, and to some degree, net profit ratios probably don't give a sense of the success of the company's core business activities because they will be inclusive of interest income, asset sales, and hedging activities of the sort that they have probably done quite a lot of in trying to launch this new system and probably many of the systems before now. Still, by whatever metric, it's actually impressive that they've kept roughly the same percentage profit, something probably helped by the continued and progressive weakening of the yen against the dollar and the euro across recent months, bringing it back to where it was a year or so ago. Consolidated sales then, and here we notice that there's actually a net negative effect from foreign exchange rates. I would guess that there are two reasons for this. Firstly, net sales means after costs, and the exchange rate conditions that make it beneficial to sell into this environment also make manufacturing more costly, but this is a short-term problem for Nintendo, reflective of the need to bulk manufacture machines ahead of launch. Potentially also this reflects the pricing of the Switch 2, which is reflective of the currency positions in 2025, whereas for Switch, while there have been some adjustments in particular countries over the last years, they've generally avoided major pricing changes, even as the currency conversion rate has become increasingly benign for Nintendo and therefore increasingly better for their bottom line. This raises the possibility that they have priced the Switch 2 with a view to being able to absorb exchange rate issues going forward, as they did with the Switch, although of course it's probably much easier for their investors to cope with changes that profit Nintendo as opposed to ones that do the opposite. Now, the territory by territory breakdown is interesting. The US and Canadian population is a little under 3 times Japan's, and if you compare the kind of younger cohorts who are more likely to buy a new machine like this, it's probably 3 or more times bigger. Plus, the Americas cover a wider territory than just the US. Therefore, we can see that Nintendo's 20% sales rate in Japan is especially good, although the Americas are still a major market, of course. These percentages are roughly in line with historical trends, although the other market is up, suggesting strong early sales in places like Australia and perhaps South Korea. Gross profit then. This is obviously less useful to view in many ways than the net profit, since it doesn't include expenses, but there are some very interesting stats here nonetheless. Firstly, the proportion of hardware sales has gone up from 41.4% to 73.2%. What's impressive to me is that even in one of their quietest halves of the year in a good long while, they still had a high proportion of hardware sales. It's not so much that 73.2% is shocking, it's actually the 41.4% that in many ways speaks well of the original Switch. Also, while there were reports of third parties feeling a little down on Switch 2 sales, the proportion of first-party software sales are more or less level with where they were before. Now granted, Nintendo only released 2 major, fully original retail titles into this window, while third parties had quite a bit for Switch 2's launch window, so you can imagine the pie being divided up into quite small slices for third parties. But it also suggests that the overall trends aren't drastically different, so hopefully for those third parties things will level out over the medium term. Digital sales are slightly down on last year, but in the same ballpark. Remember that digital sales will not look like this by the time we get to the next financial statement, because the April to September reports don't include the kinds of people who buy in the holiday season, people who generally opt for physical purchases over digital. Selling, general and administrative expenses are, unsurprisingly, up this year because they have a big amount of stuff to sell. R&D continues to trend up as well, which is positive for future Nintendo projects. As for advertising expenses, this is up, but obviously it's a little misleading since Nintendo really had very little of major significance to sell in the equivalent quarters during 2024. Ordinary and net profit ratio, again, not too much to go into with this one. The net profit ratio is the one that factors in all their financial activities, and it seems that through careful planning, they've been able to limit the impact on their profit of launching a new system significantly, which frankly speaks very well of how the transition to Switch 2 was handled by the management of the company, though the strong sales obviously did most of the heavy lifting, since you can't make a profit on systems that don't shift. Consolidated financial forecasts then. These have been revised up decently across all categories, including an increase in the dividend for shareholders. This isn't quite a victory lap for Furukawa's strategy and largely reflects a sensible caution with the new technology, which now has been relaxed as it's clear that Switch 2 is going to be here and successful, but it suggests a quiet confidence that there's no sign of Switch 2 sales slowing down with the holiday season and the hype window of the next Mario movie hoving into sight before the end of this financial year. Of course, Nintendo do adjust their forecast down as well as up, so we will have to see whether this forecast comes to pass, but it seems like they have quite a bullish attitude at the moment. However, the specific sales predictions on the second page of the consolidated financial forecasts are perhaps the most eye-catching figure. From 15 million, which was their prior forecast, to 19 million. Well, that shows incredible confidence, and frankly, 19 million is on the upper end of what I would have anticipated ahead of release. Sure, the Switch at its height shifted over 20 million at times, but this was not the standard, and given what I expect to be and what came to pass as to be the higher price with a difficult potential market conditions internationally, I thought 17 or 18 million was probably the sweet spot, and it may still be. Now again, an aggressive forecast doesn't mean that they will hit their target, and stretch targets are often used to motivate people internal to the company as much as anything else. Last year they did not meet their end of financial year forecasts, but all the same, it's still a fairly promising place for Nintendo to be. Note though that their software unit forecasts are not going up proportionally to their hardware predictions. What do we make from this? One perspective is that they will get an increased uptake from casual sales in the console, but these might not all be people who spend heavily on a breadth of new titles. The core audience could be trusted to buy most of the titles on the market, but Nintendo's lineup is quite diverse, from Western-focused titles like Metroid Prime 4 to big in Japan franchises like Kirby. Most consumers won't buy all of these. However, the asterisk on software may tell us even more. For the first half of the financial year, they have counted Mario Kart World as part of their hardware, but for the second half of the year, they are going to treat Mario Kart World as independent, even if it is bought with the system. This makes sense because they're bringing out other bundles such as Pokemon Legends ZA, and it would just confuse matters. I suspect World will still be a significant seller on its own, but this really does suggest they're being quite conservative on software units. So, where are all these Switch 2 owners going for their games? Why, it appears, the original Nintendo Switch. Their software units forecast has risen from 105 to 125 million units. This is evidently a year where they anticipate heavily pushing classic Switch titles even to new audiences. They also anticipate these Switch sales tailing off a little sooner. My guess is that if previously they were hedging their bets about whether or not to keep titles flowing on the legacy Switch for a while longer, they may now have decided to go all in for Switch 2, which might bring forward the date when the majority of new games are Switch 2 exclusive, and spell a slightly earlier end for the legacy Switch, although I would expect them to continue to be supporting the Switch for quite some time into the future, even if it's just downloadable or indie scale titles, given the vast scope of that install base. Okay, all of that is the hard numbers out of the way. Let's now pivot to the business highlights part of the presentation. First up, Mario Kart World is already circling 10 million units sold, which is wild, really, and suggests a more than 92% attach rate for the system. Okay, that's not surprising given how much they push the bundle, but it still gives World a rocket start on the system. I know people have mixed feelings about the content of the game, but I suspect that they will have very long-term plans for developing World and to keep people coming back to it and to use it to pivot to sell other titles as well. Donkey Kong Bonanza did respectably with 3.49 million units. So look, this already puts it into the mid-range of sellers by Switch standards, and that's on a tiny install base and in the first 6 weeks of sales. The question is whether it's capable of real outsized numbers, given Donkey Kong's not been a major franchise for the company for a while. It's difficult to infer too precisely how well it will do over the ultra long term though, and I will cycle back to this and explore it more fully in a forthcoming video. Jamboree is registered as a Switch title, but presumably these figures include the Nintendo Switch 2. This suggests pretty modest early sales for Jamboree's Nintendo Switch 2 edition as a physical game, but then again, with most people probably getting the upgrade pack if they're interested at all, and with the holiday season coming up, the potential of that title is likely to only grow, and we can see the first Super Mario Party being a huge seller for the original Switch as an example of its potential. Note here the software quarterly unit sales bar chart, where we see that Switch game sales actually have increased by more than Switch 2 sales this quarter. Partly, I guess it's that the Switch 2 exclusives from Nintendo at least have been thin on the ground at the moment, and yet people are still playing the system and excited for new games, but probably playing older games in the meantime. It shows the huge benefit to Nintendo of making this system cross-gen though, and I suspect the continuity of branding through the name Switch 2 has probably helped with this more than Nintendo's usual cross-gen activities. I'm not sure that we saw people rushing to buy GameCube games or DS saw as much of a spike in Game Boy Advance games, although to be fair, I don't have immediate data to this effect. While it's a rather dull title by Nintendo's sometimes eccentric standards, it does offer reassurance that the same library will continue to be available to players in perpetuity, and given the size of that library, that is to everyone's benefit. Quarterly digital sales are about the same as last year as a percentage, but of course it's a percentage of a much bigger pie, so if we assume that Nintendo Switch Online sales are fairly consistent, then this suggests that Welcome Tour, the Nintendo Switch 2 editions, Emerald Rush, and the not featured in the picture, Dragon Drive, all did at least respectably. The fact is, though, Nintendo have made a huge focus of downloadable software in this half of the year, so all told, it's not really clear how successful these games were for them, but then their development costs might have been much lower as well. The red line showing the proportion of digital sales always dips in Q3, which is the holiday season. I'm a little surprised, if anything, that the digital sales proportion is down on the same time last year, but this probably reflects the fact that some Switch early adopters would be physical collectors or casual people who might prefer physical games. That's it for the bulk of the presentation, but there's some good stuff in this small print, so let's keep going on. First, we have information about the dividend calculation, which is mainly of interest to shareholders, but does also suggest that they want to make the basis of their calculations less opaque and therefore potentially more attractive to potential investors. We also have a regional sales breakdown, which is largely what we've seen before, but do note the balance of IP-related income has been far more skewed towards Japan this year. Nintendo's strong attachment to its domestic market has many reasons, including the larger uptake as a percentage of population of their systems and games, but the fact that they can trade on a more secure basis in their home currency market also makes a difference, and a big aspect must also be the fact that they have more ancillary income from their activities, especially proportionate to the size of their market in terms of merchandise, smart device sales, and so on. Obviously, the progressive expansion of pop-up stores, theme park attractions, and movies and others in the West might contribute to this becoming more balanced over time. There's also in supplementary information a forecast for spending on aspects like R&D and advertising, with Nintendo anticipating spending the same amount again and a bit more by the end of the holiday season. Given how ad budgets are so often skewed towards holiday, this shows that they really have put their shoulder to the wheel for Switch 2 in terms of advertisements. But having said that, I assume this includes costs like the large number of demo events, whereas from here on out, the ad spend may go towards more traditional venues. The company still, we can see here, has over $1 billion and €500 million in cash and deposit, i.e., cash in its most liquid form, giving them a lot of muscle to be flexible in how they pursue their various objectives against potentially turbulent global headwinds. Now, I'll skip the detailed proportions of digital sales and key indicators, as I'm not sure there's much to say about them, but let's go to sales and sales forecasts. Here we see the total of 154 million units of Nintendo Switch have been passed, with a further 4 million expected by the end of the financial year to take the system to 158 million units sold by the end of March 2026, and surely 160 million before the system is retired must be likely at this point. In terms of a breakdown, we can see that the original Switch is dipping significantly compared to a year ago, but actually the biggest percentage fall is the OLED model, which makes sense as it is no longer the top model on the market, and nor is it the budget model. Speaking of the budget model, the Lite remains the model with the smallest uptake in terms of sales, but its sales have been dented far less as a proportion, which makes me think that it may be more resilient from here on out. I think it's still an open question as to which of these is retired first. Lite has the lowest sales, the original has the best profit margin for Nintendo, but OLED is the most impressive of the three models. The million sellers we've already seen, but it's nice to see Jamboree hitting 8.64 million. In 2023, I made a call that the Legacy Switch would have at least 3 more games that were 5 million plus sellers, and with Super Mario Bros. Wonder, Super Mario Party Jamboree, that just leaves one more title, which I suspect will either be Pokemon Legends ZA, if the original Switch numbers continue to trend up, or Super Mario Galaxy 1 Plus 2. We also have a rundown of future software, none of which is new, but it is quite an impressive list, all things considered, at least compared to recent years, although largely driven by the number of Nintendo Switch 2 editions and smaller upgrades. However, I think we should take a moment to acknowledge that, barring catastrophe, this will be the last future schedule for Nintendo's financials, which includes Metroid Prime 4 on the list. After more than 8 years, the game will finally be out, and therefore not on these financial statements any longer. The end of an era. Okay, that brings us to the end of the line for our wrap-up for this financial report. There will be a Q&A in due course, but it normally takes Nintendo a while to translate, but I will try and get to that when it comes out. In the meantime, though, thank you so much for watching, and I will look forward to seeing you next time for another Nintendo Forecast.